Hello and welcome to the September 14th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are taking a look at the S&P 500. This is probably the most widely recognized, or one of the most widely recognized indexes. It really takes a good look at the largest capitalization stocks in the U.S. Taking a look at the S&P 500, actually if we just talk about the Dow Jones for a moment, back in June the Dow Jones had kind of had a reaction high similar to the S&P. When we went up in early August, the Dow actually took out that June high. The S&P 500 did not. So the Dow was the only one of the major indices to take out its June high. On the S&P 500, this number is 1131.23. So it is a big level, because when you get into a pattern of lower lows and lower highs, you can't really reverse that trend, or the trend hasn't ended until you take out the most recent high in that trend. So that lower high has to be eclipsed, and right now on the S&P 500 that's 1131. Yesterday's action on Monday was very strong. We went up about 1.1% on the S&P, finished up 12 points on the day to 1122, and it's gotten us back into this range where we had 7 consecutive attempts to get through 1131 back at the end of July. Actually, I think all these days were in early August. But we weren't able to make that move through 1131. 7 straight days we were between 1120 and 1130, but we could not push through 1131. So it's going to be really interesting to see whether or not this move to the upside has enough staying power to actually push through the 1131 resistance level. If we can do that and get some volume in on the move, then I think things would start to look much more bullish, at least in the near term. Until that time, I think you have to remain cautious. From a technical sense, there is a reverse head and shoulder pattern that's in play off of this downtrend. You can see I've annotated the left shoulder here down around 1040. We went back up. This resistance line at 1131 almost doubles really as a neckline. You can see the left side of the neckline touching this 1131 area, the high in June, and then after going down and putting in the head, the low closed down around 1022. Intraday I think we got down as low as about 1010 or so. We did rally back up. The right side of the neckline went in just below the 1131 level. I think this was around 1128 or so. Then we pulled back, almost put in a perfectly symmetrical right shoulder, coming down to the 1040 area, basically challenging that 1040 left shoulder as well, and now we've rallied back up. The only problem I have with this pattern is that we have seen technical patterns like this one fail in the past. What I would do is, if we get that breakout above 1131 and the volume is confirming, in other words, on the S&P 500, I'd like to see at least 5 billion shares on the move up. If we can get that, then I think you can play the market on the long side, but I would again keep a tight stop, because we did have a failure on this breakdown of a prior head and shoulder top. We came up, we put in a left shoulder here in January, came down to the neckline here, went up and put the head in April, came down, put in the right shoulder here, down around the 1045 area again, went back up. This could be construed as a right shoulder here, a little lower than the left shoulder. The right neckline a little lower than the left side of the neckline. And then we had this breakdown late June, early July. I think it looked very bearish at the time, but we rallied right back up. So if we do break this neckline to the upside at 1131, you want to be conscious of a pullback and a failure to sustain that breakout. Going to be difficult. Also, during a downtrend, RSI 60 tends to be a pretty big resistance area. We're right there again. Stochastics at 96. You got to be careful as we're up against some key resistance levels in terms of our momentum oscillators. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.